Welcome to Insights into Insurance from the A-Team at Americana Insurance Group. All information provided is educational in nature and not intended to be acted upon without first consulting the appropriately licensed professional.
It's a Saturday morning. That means it's time for Insights into Insurance with Americana Insurance. And Tom Sorensen is in studio with us. And Tom, welcome aboard on a hot, steamy Saturday morning. And you're going to throw me under the bus here, aren't you?
I love throwing you under the bus, Mike.
We haven't had this pop quiz for probably, 2 months now?
So it's almost been 2 months. Yeah, I just thought it was a few weeks ago, but it's already been 2 months. I was planning on doing one every month with you. And so you've skirted away from it for over 2 months now. So
I thought it was a lot sooner than that. But needless to say, it's pop quiz time on our Insights into Insurance program. Will I have a dunce hat on, or will I have a star put on my chest when we're all done? We'll find out.
My guess is you're going to keep the dunce hat on.
Okay. Oh, I'm glad he's had confidence with me. Mike Whitus along with Tom Sorensen and Americana Insurance, and let's just jump right into it. Question number 1.
Yes, Michael. A customer at a local restaurant always chooses not to tip the waitress, and on the sales receipt writes racially discriminating comments. The waitress notified the restaurant owner about the comments and asked him to speak to the customer or refuse service. The restaurant owner has taken no action, and the waitress decides to sue him. How would this claim be covered? And the answers are A, or potential answers, I should say, is A, commercial general liability, B, employment practices liability, C, employment practices liability third-party coverage, or D, hostile workplace coverage.
A difficult one. I'm going to go with A, CGL insurance.
Commercial general liability insurance is what you think, huh?
That is what I'm thinking.
Well,
I'm going with answer A.
Let me try to do something here. And there.
That was wrong.
That was wrong, yes. So the answer would be actually B, employment practices liability. Okay, so the customer was doing something to the individual and the owner did not do anything, okay? So as an owner, let's just say I'm the owner of the restaurant, and I'm not doing anything about it, and having this employee of mine go through this all the time, okay, I'm liable for taking care of that situation, and if I don't, I can be sued, and that's where the coverage now, employment practices liability coverage, is not a normal coverage that comes with your commercial package coverage. It's usually
an additional coverage.
It's either an endorsement to the policy, and whenever I say an endorsement, it means basically think of it as options in your policy.
Coverage.
Yep, that you can check and say, yep, I want that coverage. Or sometimes it's a whole nother policy beside itself. Okay, so yes, so that's where the issue or potential coverage would fall under.
I can see commercial folks right now thinking, oh my goodness, I better pull out my insurance policy and find out, do I have that piece of the puzzle in my insurance policy? And if not, I guess I better get on it.
Well, actually, this is where we call it EPL in the business, acronyms like crazy. So we have employment practice liability coverage, which is one of the most common claims that are made against employers nowadays. Okay. And it can be expensive. A lot of them are thrown out or not paid, but the issue is you yourself as an employer have to pay the attorney, okay, which can be very expensive, can $75,000 or whatever, you know what I'm saying? So I'm just saying, throwing out a number like that, but that's very common, okay? Now, let's just say that the roles were reversed, okay? So if that waitress was doing things to the customer, then that would be an employment practices liability third-party coverage. Again, you can get the regular employment practices liability coverage, but then there's another endorsement or type of policy that's called third-party coverage. So if you or your employees do something to a customer or someone like that, or let's say someone's delivering
A pizza
or something,
Yep.
or actually delivering meat to your business, okay, and that person is going through harassment or whatever, that would be a third-party situation from one of your employees that's happening. So that's where that coverage would fall under.
We're talking with Tom Sorensen on our Insights into Insurance program here on 1450 KATE. It's Pop Quiz Day on this Saturday, and let's go to question number 2.
Yeah, you're 0 for 1 so far. Okay, number 2. First of all, condos, okay? Condominiums are normally a part of an association, correct?
I would say so.
You can have 2 condos, you can have 25, 50 condos all in an association, doesn't matter, okay? A condominium will have directors and officers that are voted in by the condominium association. If a director and or officer gets sued because they were in violation of their fiduciary responsibilities, what insurance will provide defense and coverages for damages? Will it be A, directors and officers liability, B, employee benefits liability, C, employment practices liability, or D, all of the above?
Well, I'm pretty sure directors and officers liability would be one, and I'm just not sure about if they're actually an employee of the association or under the employment practice liability. I'm going to go out on a limb. I'm going to go with A, directors and officers liability.
Good job, Michael.
1 for 1.
Yes. You and a lot of people don't know this. Okay, a lot of the nonprofits, people, they all got directors and officers. Okay, I know that you're on the fair board.
Right.
Okay, there's decisions that can be made by you and the board and the officers, directors and officers, that could come back onto you as individuals. Okay, so I'm going to give you an example of a condo association. So the board, let's say the directors and officers hire an employee, okay, to take care of maintenance. That person falls off a ladder, breaks his back, okay, sues the association. Okay, well, that should have been covered under work comp, but the directors and officers made a decision of not covering them under work comp, buying work comp. Okay,
Putting them under payroll, paying them cash under the table.
right? Okay, now the association is going to get assessed all these fees for this liability. Well, the association members could come back to the directors and officers and say, hey, you guys made a bad decision here. You guys made a decision. You should have had work comp on this individual. We're going to sue you for, okay. So
Yep.
those are the things that you can get involved in when you are on a board. Okay. And so that's again, directors and officers liability is usually an endorsement to a policy, or many times can be a whole nother policy above and beyond your regular policy.
We're talking with Tom Sorensen with Americana Insurance on our Saturday edition of Insights into Insurance. We are doing Pop Quiz Saturday. I'm 1 for 1. We'll find out on question number 3. We'll take a quick break, and when we come back, we'll see how I do on the remaining pop quizzes on our Saturday edition of Insights.
I have all the no confidence in you in the world.
We're going to the Super Bowl.
You got that new home edition and you're keeping it covered.
Brad, I can help with coverages. Man-to-man coverage, zone coverage, combo coverage.
I don't know, Peyton. I was thinking the types of coverages that your nationwide agent offers.
Oh, like home, auto, business, life, farm, boat, your tour bus.
Products availability varies by state, agent, and other factors. Nationwide Mutual Insurance Company, Columbus, Ohio.
For all your many sides, there's Nationwide. Call Americana Insurance Group and Albert Lea and Wells today.
Welcome back to Insights into Insurance on this Saturday morning on 1450 KATE. Tom Sorensen in studio with yourself, Mike Whitus, trying to beat the buzzer and put on that beautiful thing on the refrigerator.
Happy face star, whatever you want to call it.
Yeah, I'm 1 for 1 as we go to question number 3, Tom.
Did you get a lot of those faces that you thought were going to be happy and they had frowns on?
It's turned that frown upside down, but I couldn't convince my mom and dad to do it on the refrigerator. So let's go on to
number
pop
3.
Quiz number 3.
Okay. So in the business world today, there's a lot of companies that need to be reliable on another company for services or products. Okay, so this question comes from something like that, or an example of that. Americana Insurance has a client who's a small box manufacturer. It receives all of its cardboard from a small company in St. Peter, Minnesota. They are concerned that there is a loss of some sort to the St. Peter location. They cannot get the cardboard they need. How is this covered, or how could it be covered? Is it A, dependent property coverage, B, blanket coverage, C, off-premises coverage, D, the cardboard supplier must provide their own insurance and name the box manufacturer as an additional insured?
I'm going to go with D. The cardboard supplier must provide their own insurance and name the box manufacturer as an additional insured. Ouch.
Yeah, ouch. Sorry, Mike, but
not the correct answer.
No, that's not the correct answer. It is A, dependent property coverage. Again, if that manufacturer, okay, so what would happen? Okay, and by the way, this is a fictitious.
These are all examples.
Yeah, these are examples. So let's say that St. Peter location or that St. Peter company burns down. Okay, there is no cardboard that's going to be coming out of that building or that warehouse or that manufacturer for many, many days, if not months, if whatever
years.
It is. Yeah, so that company. In Albert Lea that we fictitiously insure, needs to get cardboard. Well, there's going to be an extra expense to get cardboard from somewhere. Let's say all of a sudden they have to go to Kansas City, Missouri, okay, to get cardboard. It might cost more. It might the cost of getting it here is going to be more. There's just going to be extra expense to do that. That's where this coverage would come in. Okay.
So can they recoup, for example, those losses because they are not able to get from their current supplier?
Right. Basically, that's what it would be, is because of the extra expense that it would be to get cardboard from somebody else, that's where the coverage would be. Okay. And plus, there might be a cost of, we need it shipped now. You know what I'm saying? All of a sudden, there could be an extra expense that occurs there. Right. Now, you know how that is. Shipping's expensive. So, okay.
So I'm 1 for 2 now on our pop quiz Saturday morning here on our Insights into Insurance program. Let's go to the next question, Tom. Throw it out.
Yeah, well, first of all, I want to explain a little bit. Business income and extra expense. Okay, so business income and extra expense coverage is something that can come with a commercial policy, a commercial business policy, and it has a what we call a coinsurance penalty to it. Okay, so you can buy this usually from anywhere from 0% up to 100% coinsurance, which that's saying is whatever your annual receipts are, you are saying that. So if it's 90% coinsurance, your cost of insurance is going to be a lot less per $1,000 worth of coverage, let's say, than if you went with 50%. So what the company is saying is that 50%, we're giving you an allowance to be underinsured quite considerably. But at 90%, we're only giving you a 10% opportunity to insure yourself, underinsure yourself. So if those values weren't properly reported to the insurance company, that they got some work to
a little
leeway. Okay, so number 4, Americana Insurance insured is a warehousing operation. They have indicated that they could suffer both business income claim and an extra expense claim for moving to a new facility. What insurance should you advise they carry? So basically, the reason why they would move to a new facility is because, let's say that their operation burned down or had a windstorm that came and destroyed it, so all of a sudden they have to move to a different spot to continue their operations. Okay, so would it be A, they need a business income and extra expense coverage? B, business income without extra expense because it automatically covers expediting expense. C, a separate business income form and a separate expense form so that they have adequate limits. Or D, just purchase an extra expense form because they should be operational in a very short period of time.
I'm going to go with A, business income and extra expense.
That's right. And so why do you do that? Okay, so that operation, let's just say it burnt down. Okay, so they're going to be without business income for a while, or they're going to be without any income because they aren't selling anything. They aren't making anything. Okay,
right.
So first of all, they got employees that they still might have to pay. Okay, they got certain things that they got to do to still have income so that they can pay certain bills and things like that. Okay, but then they also have extra expense to say, hey, we got this, well, let's just say it's a box company, but we got this building over here that we can run our operation out of, or at least part of our operation out of it for a little
moving
while.
Expense.
But there's going to be an expense to getting into that building, to moving the phone lines, to moving the computers, to getting equipment in there. I mean, it's never in. It's a lot. Okay, so
get a hold of Americana Insurance. Let's put the puzzle pieces together to make that puzzle. And the number at Americana Insurance, as always, is 377-2000. Tom, we ran out of time. We're gonna. You've got a whole lot of quiz questions, and we might have to do this again next Saturday.
That would be fun. I love it.
All right, we're 2 for 2, so not too bad. And of course, if they do have questions for our program, they can always email them to us, Tom.
Yep, absolutely. They can email them to insights@americainsurance.com, or they can go to our website at americainsurance.com.
I'll put the little thing on the refrigerator. It was 2 for 2 on our pop quiz.
Yeah, I think that's an F.
All right, we'll leave it at that. Have a great Saturday. Stay cool on this Saturday, Tom.
Hey, you too, Mike.
We'll see you next Saturday.
And you're not as bad as F. You got at least a D minus.
I'll take it. That's Tom Sorensen. I'm Mike Whitus. That'll wrap up our edition of Insights into Insurance on this Saturday morning here on 1450.
You've been listening to Insights into Insurance from the Americana Insurance Group. All information provided is educational in nature and not intended to be acted upon without first consulting the appropriately licensed professional.